In 2019, Amazon announced a deal to order 100,000 electric vans from automobile company Rivian. The deal was struck with the intention to eliminate the tech giant's carbon footprint by 2040. But somehow the deal didn't go through, and Amazon opted to go with Stellantis NV, the auto manufacturing company that produces Chryslers. So what does this deal spell out for both companies? Who gets the short end of the straw here and why? Before we get started, don't forget to like and subscribe to see more content like this in the future. Amazon, which owns 20% of Rivian, announced that they had brokered a deal with the California-based EV startup to buy 100,000 units of their electric vans to replace their current delivery vans. The deal was spread out over 8 years, with the first 10,000 units projected to be delivered by the end of 2022. Amazon even tested Rivian delivery vans in several locations, including San Francisco and Los Angeles, to make the deal even more concrete. So what was the reason for the deal falling through? Stick around to find out. Amazon revealed that it owns a massive stake in Rivian while filing with the SEC in late 2021, controlling over 20% of the stakes in the EV company. Rivian also made a statement in a filing in mid-2021 that Amazon had more than $1.3 billion in investments in the automaker and controlled nearly 150 million shares of stock. Therefore, we can say Amazon's investments in Rivian have already paid off handsomely, and 20% of Rivian's market capital represents approximately as much as Amazon's 2019 and 2020 net income combined as of 2021. Not so bad for a startup company. The Amazon-Rivian deal would have been incredibly beneficial to both parties, both in terms of logistics and finances. Rivian delivers the vehicles as planned, their stock could climb further, and Amazon would stand to benefit both ways with lower fulfillment costs and a boost in the value of the Rivian ownership stake. Rivian is also hoping to rake in thousands of additional dollars beyond what customers pay at the outset. The startup says it believes the lifetime revenue opportunity for each vehicle from software services alone is as much as $15,000, $10,000 for autonomous driving features, and the remainder for a monthly subscription plan for infotainment, connectivity, diagnosis, and other services. According to a Business Insider, last-mile delivery corresponds to 53% of shipment expenses. Another study carried out by the University of Michigan in 2018 reveals that electric vehicles cost only 43% as much as those that run on gasoline, which means Amazon could gain a new competitive advantage over other retailers once it gets the new electric vans on the street. As of 2019, when Amazon announced it would buy 100,000 electric delivery vans from Rivian, it gave the little-known electric vehicle EV startup some needed exposure and credibility. However, it came as a shocker when Amazon released a statement on January 5th that it would be the first commercial customer for the Ram ProMaster electric van, which Stellantis NV plans to launch in 2023. The retailer said it plans to put hundreds of the Stellantis vans on the road as part of the long-term agreement. This statement caused Rivian stock to take a huge nosedive, hitting an all-time low after losing 11% value. However, Amazon confirmed that the partnership with Stellantis is only supplemental to the Rivian collaboration, and that the deal was still on. We always knew that our ambitious sustainability goals in our last-mile operations would require multiple electric delivery van providers. An email statement from Amazon to CNBC states, "We continue to be excited about our relationship with Rivian, and this doesn't change anything about our investment, collaboration, or order size and timing." Rivian also released a statement that its deal with Amazon remains intact, thriving, and growing, and called the latest development beneficial for the industry. Large fleets focused on electrification and carbon neutrality represents a win for the mission of Rivian and Amazon, the EV firm said in an emailed statement. Amazon's scale is globally unprecedented, and we expect them to purchase vehicles from many providers. Although Rivian had the world's largest IPO last year and was valued at over $100 billion when it debuted on the stock market in November and was hailed as a promising rival to Tesla. However, the startup EV company has delivered just 42 of its electric pickup trucks to customers as of October and said last month it would fall a few hundred vehicles short of its 2021 production target due to supply chain issues and challenges with battery production. Rivian is expected to deliver 10,000 delivery vans to Amazon by the end of 2022, and if it doesn't meet that production deadline, its bottom line could suffer. The EV firm has confirmed it expects much of its near-term revenue to come from the retailer's delivery order. Amazon's deal to buy Rivian vehicles is part of the tech giant's stated mission to eliminate its carbon footprint by 2040, represented by the largest purchase of light-duty EVs in history, even though Amazon, which owns a decent stake in Rivian, is not obligated to follow through on the purchase. When the electric vehicle maker filed for its IPO last August, it specified in its regulatory filings agreement with the retailer does not contain a minimum order quantity or minimum purchase requirements, and that purchase orders are subject to modification or cancellation upon notice. Both companies insisted that the deal was still on, and will keep a close eye on how this one progresses. On the topic of electric trucks, check out this video about how one man managed to scam over $34 billion hiding behind an EV company. And we'll see you in the next one.